For many of our clients, VAT and its interaction with special regions is a crucial topic as they need to ensure that they're compliant with VAT complexities across the EU. My name is Michelle Lang, and today I'm joined by Christina Cawley, Senior Manager in our consulting team, and Eoghan Rogers, a Director in our tax technology team. Christina, if we start with you, maybe you could give us some more background information as to what exactly a special region is.
Yeah, thanks, Michelle. So a special region effectively is what we refer to as an area in a specific country that for geographical or political or economic reasons has its own distinct VAT rules and VAT treatment. A good example of this is the Canary Islands in Spain, where it's part of Spain for geographical and political reasons, but it has its own VAT regime called the IGIC. And part of that is its standard rate is 7%, but mainland Spain's standard rate is 21%. So it's very attractive for businesses to do business in the Canary Islands, very attractive VAT rate. But it can mean that it's quite complex for businesses, because if a company is trading from mainland Spain to the Canary Islands, instead of being a domestic sale for VAT purposes, that's actually an export from the EU. So, and same for if it was coming from Belgium or France, again, it's an export rather than an inch-community sale to Spain. So this can be very difficult for businesses to take into account within their SAP systems. Another example is Northern Ireland. So as part of Brexit, obviously, Northern Ireland now is part of the EU for VAT purposes. But when dealing with mainland GB, it is still part of the UK for VAT purposes. So there's kind of a mixture between UK VAT treatment and then EU transactions. So a good example of this is if a company is selling from Belgium into Northern Ireland. For that purpose, if they meet all the conditions, if there's a XI VAT number or an EU VAT number for the customer, they can zero rate that supply as an inter-community supply, as opposed to if they were selling to mainland GB, that would be an import into GB. So it's very difficult for businesses to, one, understand the VAT complexities, and two, for them to treat that correctly within their SAP systems.
Yeah, for sure. And the reason for that complexity within SAP is because SAP is quite inflexible when it comes to determining different areas of those regions that you're talking about. So SAP will just work on a country-to-country basis. So in the example I'm creating here, we've got a sale from Belgium into Northern Ireland. So SAP only really has the opportunity to trigger this as a Belgium to GB sale. But of course, for the reasons you just explained, if my ship to here is actually in Northern Ireland, the VAT treatment is different. So what we've done in Meridian is we've tried to come up with a solution where we actually take a further step into the customer master data past the country of that customer. One of the areas we can do that is with the region. So there are 8 regions in SAP related to Northern Ireland. Once one of those is contained within the ship to partner that we use in the transaction, we will automatically change that to a special region tax code. The way we do that is through the condition record. So I've created the transaction here. And if we go and look at the condition record, you'll see that we do hit the export taxes sequence, which just means it's a sale out of Belgium. And you'll notice that the destination country here is XX. So to explain why that's not GB, it's because with the Meridian condition records, we simplify the countries down to either EU or XX, XX being non-EU countries. So with GB being outside of the EU, it falls under this. So that's why we have that there. But the important parameter here is the S we have in customer tax classification. That's not taken directly from the customer master data. This customer would be set up as liable for taxes. But because we've been able to pick up the fact that they have a region in Northern Ireland, we've then done some further checks to say, should this be a different tax code and a sale to a special region? If we hard-coded that into the customer master data, when they then get sales from mainland GB, like you mentioned, it would also still trigger this S for special region when it's not actually in fact the case. So just to show on the customer master data what's happening here, this is a customer here. You'll see the address is in the UK, but importantly, the region here is Belfast City, which is part of Northern Ireland. With the Meridian logic, we've seen in the master data that that's the case. We then have some other checks we do. If we go to the control data here, we have to check, like you mentioned, first of all, does this customer have a Northern Ireland validity? In this case, it does. So we know we're able to use that Northern Irish validity in order to make this a standard EU sale as if they're any other part of the EU. However, if the Northern Irish validity was not maintained, we could still use that simplification if in the other tab here we saw a different EU VAT registration, in this case an Italian one. So all of that complexity and those different checks that we need to do We've removed that from the manual process and automated the whole transaction flow from start to finish, meaning that customers no longer need to worry too much about, is somebody going to pick up the fact that this exact ship to location is in Northern Ireland? We do that by looking at the region. So all of those things are considered in the code, and it really simplifies the process.
Okay, thanks, Owen, and thanks, Christina. I think it's really important for businesses that they firstly understand that they're selling into special regions, but then obviously in terms of how that's managed through their solution, because it could result in incorrect reporting, like in the example you mentioned from Belgium to Northern Ireland. That could have been in principle treated as an export had the special region not been set up with XI VAT number or classified as an EU customer. And therefore it ensures for businesses that their VAT compliance requirements are managed in the relevant jurisdiction. It's also important, obviously, that your SAP solution is robust and flexible to deal with such complexities. That's it for today. If you'd like any more information on the Meridian solution, please contact meridianglobalservices.com.